Takaful Company structure. As I told you that shareholders are coming and shareholders they have intention to create a company, and this company is Takaful Company. So first of all, shareholders are paying capital. In insurance language or in insurance terminology, we are saying paid up capital. We are saying paid up capital. You know about this word or not? Every insurance company, they are mentioning in their letterhead or paid up capital this much million. So first of all, they are coming and they are paying some capital. This called paid up capital. Now Dar Takaful paid up capital is 150 million. This 150 millions is where? In this green account. And this is pool number 1. This is pool number 1 or account number 1. In account number 1, shareholder money is there. Shareholder money is paid up capital. Okay. Shareholder are creating one other account, and this called participants fund. Participants are A, B, C, D, E, F, me and you, a lot of people, public. Okay, they are coming and they are paying. In conventional terminology, we say that they are paying premium. They are paying premium. But here they are paying contribution. They are paying contribution. They are participating in this account. So the second basic or जो कहते हैं ना कि बुनियादी फर्क, the base difference is in conventional insurance only one account, one pool of fund. Policy holder money is coming there, shareholder money is coming there. All money is coming to one pool and all going out from one pool. In and out from one pool. In conventional. While in Takaful, from the beginning, there are two different accounts, two different pool. Number one is shareholder pool, and number two is participants pool. Okay, participants A, B, C, D is coming and contributing their contribution, and this is in a red account. Now, in Islamic, it is the formula that when we do any business, or if there is any transfer of wealth or property from one party to another party, it should be based on contract. And contract creates relationship. What is the formula? The formula is whenever there is transfer of wealth or property from one party to another party, it should be based on a contract. And contract creates relationship. Contract create relationship. For example, you all people are having your mobiles. From where you got these mobiles? Anybody stolen this mobile? Madam, you stolen? No. You got this mobile by force from someone? You got rishwa?
Gift, maybe gift.
Huh?
Gift.
Yeah, gift. Okay, I have also. This mobile is a gift. Yeah. Gift is also a contract. Okay, most of us, we are going to a shop and we are buying mobile. What we are doing? Buying mobile. Before 1 minute, mobile was the property of the shop owner. And now after 1 minute, mobile is your property. So transfer of property or transfer of goods from one party to another party. Before 1 minute, You are the owner of this money. When you paid after 1 minute, now the shop, the seller is the owner of this money. Transfer of wealth from one party to another party. But this transfer of wealth or property, if it is robbery, then it is not a contract. If it is by force, then there is no contract. But when you go to Sharaf DG and you are buying mobile, you are paying, this is exchange of things of value with another things of value with mutual consent. Your mutual consent is here. And when you do this deal, we name this deal is a sale purchase. What is the deal? The deal of sale purchase. And this deal or this contract create a relation. What is the relation of you with Sharaf DG? You are buyer, Sharaf DG is seller. Buyer and seller. Is clear? Okay. So whenever there is transfer of wealth or property from one party to another party, it should be based on a contract. And contract creates what? Relationship. Okay, here participants are giving money, transfer of wealth from one party to another party. Who are participants? A, B, C, D. And who is other party? Shareholders. Okay, what contract in between of this both? This create a contract of wakala. Go back to the Takaful model. Remember the word? Wakala. Yeah, the first relationship created here between shareholder and the participant, and the contract between shareholder and participants is the contract of wakala. Okay, what is the name of both the parties? Participants are muwakkil or contributor, principal, and shareholder are wakil or agent. You can write the names here, agent and principal. In wakala or in agency, there are two parties. One is principal, one is agent. Okay, so shareholder wakil is agent and participants are principals. Is clear? Okay. In conventional, in this stage, which relationship is created in conventional? In conventional, which relationship? Nobody knows. Relationship of insured and insurer. Shareholder is insurer and the policy holder is insured. So the difference of relationship, here the relationship is relationship of agent and principal, while in conventional the relationship of insured and insurer. Okay, these are two different funds. One is green, one is red. The relationship is of principal and agent. Okay, now I have a question. Do you know about agency contract? What do you mean by agency contract? Or what is agency contract? Agency contract. I appoint him as agent. I am saying, take my car, sell for me. Sell for me. And the market price of this car is 50,000. And I will give you for your service 1,000 dirhams. Is clear? Now he is taking my car. His responsibility is to make more money for me. Not only to remember 50,000, and if someone is giving 80,000, he will say, no. I will only just sell for 50,000. He went to Abu Shagara or Aloware or anywhere and he sold my car on 150,000. What price? How much profit? How much more? 100,000. Okay, this 150,000 total price is mine, or he will take any portion from this? He cannot take anything. All the money he will give me. What is his right? Only 1,000 dirhams. His agency fee. It's clear? He did his efforts, yes. On other side, ethically, I am required to give him some incentive. That very good, Shahbaz, this is Ikramiya Bakshish incentive for you. Okay? But he cannot claim. He cannot say that, okay, just take this 50,000 and 100 I will take. No, because he was appointed as agent. And all activity of agent goes to the principal. This is one scenario. The other scenario, he did his efforts, but the car was sold only on 30,000. Now, can I ask him to give me 20,000 more?
I think you know the term for the contract, the basic contract.
The basic contract.
You mentioned that you will sell for 50,000.
No. I am not bounding. I am not giving him one price. I'm just telling you that the market price of my car is 50,000. Okay, but when he reached Abu Shagara, now the new rules, for example, came and the government banned the cars that we will not renew registration of 3 years old car. And then suddenly the prices come down. Who is responsible, he or me? It's my car. He has nothing with my car. Okay, he sold my car on 30,000. Again, I will pay him only 1,000. Sah, his wakala fee, his agency fee, and I will take 30,000. He was going on Sheikh Zayed Road, and there was, unfortunately, without his mistake, without his negligence, without his mismanaging, but suddenly there was an accident and my car was cancelled. Can I ask that you are responsible? Give me my car. No. Because he is my agent and he is providing service to me against 1,000. And this was not his mistake. Yes, if his mistake is, then I can sue a case. But if it is not his mistake, I cannot ask. Is it clear? Huh? 3 scenarios. Is clear? In wakala agency, the agent is not responsible for anything. If there is any loss, this loss is my loss. If there is any profit, this profit is my profit. Agent only is liable only for his agency fee, nothing else. Yes, on other side, if he made a big profit for me, I will give him some incentive. Clear? Okay, now here, the wakala contract is signed between shareholders and participants. Participants said that will give you 30% of our total contribution. 30% of total contribution. For example, total contribution is 100. So 30% is going to shareholder. How much is the remaining balance? 70. 70 is for claims and re-takaful. And this 30% is wakala fee for shareholders. Agency fee. You got my point or not? Okay, now in this relationship, the question is there any transfer of risk from participants to shareholder?
I don't think so, because there is sharing with us.
Yes, you are thinking okay. Your thinking is correct. Is there any transfer of risk from participants to shareholder? Because agent is not responsible for any loss. You remember the example or not? Agent is not responsible for any loss. He is responsible only in one case. If he did my loss intentionally, or his mistake, or his negligence, or his mismanagement, misconduct, then yes, he is responsible. Other than this, finished. Even if he sold my car only on 1,000, I will give you 1,000 because he did his job. He was appointed only just to manage this transaction for me and to sell this car for me. Is clear? Okay, here participants, public are coming and they are saying, "Oh shareholder, please manage our fund." Shareholder are managing the fund, and what is his responsibility? To cover claims, to compensate claims, and to search for re-takaful or reinsurance and run the company, the business. Is it clear? So here is no risk transfer from participants to shareholder. While in conventional, these two parties, shareholder and policy holder, are coming, policy holder paying premium, and they transfer their risk to shareholder and finish. And there is only one pool or one fund, one account, and the whole money in out from one pool or one account.